The Federal Reserve meet on May the 3rd, and there's an increasingly bearish attitude to stocks amongst analysts, and the prospects of further gains are viewed nervously. Despite these bearish projections, April has been quite a strong month for some of the world's major indices. You can see that the Dow has gained over 1.5%, the Nasdaq's fallen around 1.13%, but the DAX has gained nearly 1.5%, Euro stocks up over 1.5%, and FTSE 100 up nearly 3%. So with, and the S&P 500 itself has been able to make gains of 0.82%. So with bearish analyst reports growing, there's worries over higher rates from central banks, a tightening of credit conditions, and there's geopolitical concerns bubbling away in the background with Russia and Ukraine, China and Taiwan. What can the seasonals tell us? Well, quite a lot. The old saying, sell in May and go away, is marked on the seasonal chart. May's been a negative month for the S&P 500, one of three negative months that there has been over the last 95 years. So will this time perfectly for the May Federal Reserve meeting? Will the Fed push back against the market's hopes of rate cuts this year? Remember, short-term interest rate markets are still hoping for the Fed to cut rates this year. And if the Fed contradict that, would that be the catalyst to send stocks lower in line with its seasonal pattern? Major trade risk. The major risk here is if the rate decision contains a dovish surprise, which makes markets once again expect a pause from the Federal Reserve. Remember, don't just trade it, but season exit.